Hi, this is Robert Luke, and today I'm going to be giving you a very quick market update for the 1st of May, 2022. So, there are three major areas we need to cover today. And number one, what are the real estate statistics for the last 3 months? And I'll be focusing on single family homes and townhomes and condos. Number two, what are the interest rates doing today and where are they forecasted to go in the future? And number three, what are the real estate influences on the market, like the overall economy, et cetera? Okay, so let's look at some statistics now. So we're looking at single family homes in those three counties, Salt Lake, Davis, and Utah. We're going to go back 6 years to 2017, and we're going to look at some, statistics for those years. April 2017, we got a number of homes sold 1944. The median list price was 315. The median sold price was 315. So roughly, we're about whatever they listed for is pretty much what they sold for. The price per square foot was about 122, and the days on market were about 9 days. You can see as we go through the years how the number of homes has increased to here, and then COVID hit, and we went down to 1758 for the number of homes sold that month. Went up last year, things were starting to get back to normal, and then boom, the interest rates started going up this year. So we're seeing a decrease in number of homes sold, kind of back to the COVID numbers, mostly because everybody's unsure about the interest rates right there. But look at this: the median price went from 315 all the way up to 585 this year. So the price of homes, because the inventory is so low, is really increased. The median sold price has also increased, and this is what's frustrating for a lot of buyers. Look at this: the sold to list price is 104%. So that's where you're seeing the multiple offers and houses selling over asking price and so forth. Now let's look at condos and townhomes, the same chart. So 2017, 621 units were sold for an average for a median price of 210,000. They pretty much sold for list price. Then we have a ratio of about 0.99. Price per square foot was 139 and about 5 days on the market. As we come up to COVID hit, it dropped down from 621 to 585. The prices were still going up, and pretty much they sold for what they were asking. Let's look at this year. So sales are picking up. I think sales are picking up, not quite as much as they were last year, but interest rates are going up and so forth. But a lot of younger buyers are not able to afford the homes, and so they're moving to townhomes. But the price of townhomes have averaged about 410. They're selling for about 430. So and that's showing you that they're 103% of asking price. And the price per square foot is about 278. Days on the market about the same, about 5 days. Here's a really interesting chart. I get a lot of my clients asking if they should build or if they should buy, a used home. This is really interesting. So here in 2015, this is the cost to build a home. Basically, you can see it went up, down, and so forth, stayed fairly, and it's just gone. Here COVID hit, all of our inventory of wood and supplies to build homes, just everything shut down, right? And then the demand picked up as the interest rates. Look at this. So the cost for these builders to buy a home has just increased astronomically, which is why you're seeing these homes that are so expensive. You're always going to get a better deal by buying a used home. Plus, you see what you get. The trees are usually more, grow, and the yard is more filled out and things like this. You don't have that new car smell like you do with a brand new home. But the only risk to a new home today is you just don't necessarily know what your price is going to be. I've had a couple clients buy homes that are 8 months out, and who knows what the interest rates will be, right? I've had people look at homes at 3%, and all of a sudden it's 5%. Speaking of interest rates, now let's look at some charts. I'm pulling these charts right off of Freddie Mac, the website, and I'll post the link. So this is their data, but it's really good data. Here's another Freddie Mac chart that I love. Okay, so this goes back to 1975, and here's 2020. Look at the interest rates during the 80s. I mean, they were up at 17%. Here's my first house right here. I bought a house, a VA loan, 11% interest rate. So when I talk to a lot of first-time home buyers, they say, "Oh my goodness, it's gone from 3% to 3.1. It's better than 11%." So we're going to look at the 2022 economic report for the governor of Utah. Basically, they're saying that we have had probably the highest growth in the nation as far as people moving in to the state and so forth, about 18%. Which is pretty much matched by the number of housing units that increased, about 18% also. They're expecting the growth to continue. It'll be, maybe not as high as 18%. All right, here's the fun part. I get to pull out my crystal ball. So, in my opinion, rates will not be abnormally low as they have been over the last couple of years. They're going to, as we've looked at before, they're probably going to stabilize, in that 5-6%, which is kind of a historical average. As the interest rates go back to normal, it will slow down the market. I'm already seeing that right now. I've got some buyers that I'm working with and some listings where we've seen people starting to lower the price. They're coming in high because we're in May, right? Everybody puts their home a little high, but they're dropping their prices quickly. If you're thinking of downsizing, your timing it actually is really good because even though the price of your new home is a lot higher than you thought it would be, the price of your existing home has really appreciated. Many downsizers will be paying cash, so the higher interest rates really shouldn't affect them that much. If you're thinking of upsizing, your timing is also pretty good. And the reason is that your less expensive home will sell fast for top dollar, probably with multiple offers. And the larger home that you're looking at will have stabilized in price or even lowered its price due to the higher interest rates. In other words, the large home will not be increasing in price as fast as your less expensive home. If you are a first time home buyer, my recommendation is to get anything you can fast. If you buy a townhome today, you can always sell it or rent it out a few years from now. You don't have to get your ideal perfect home now. And even if the interest rates are 5 or 6, that's kind of the historical average. So I would just get into something now because our appreciation is always going to be there. A lot of people are moving into the valley and rates may go up, they may go down, but you can always refi later, or you could rent your home, sell it out, and get a bigger home later. So if you're looking at one of these scenarios, please give me a call, 801-243-7804. We can kind of go over the strategy and so forth. Everything is changing. We're in a lot of flux right now, but it's not panic city. I mean, going from 3 to 5 or 3 to 6 sounds like a lot, but most of history has been 5 to 6 to 8%. Thanks.